Okay, Bismillah Rahman Rahim. Once again, the question AFM September December 2021 and the question name Ziki Company, Zikai Company, G Chai Company, whatever the pronunciation you can call. So this is what the exam question. Whenever you open the exam question, the very first thing is that the very first thing you have to make a go through about the first appearance of this question or the details. The following exhibits available on the left hand side of the screen provide information relevant to the question. Zikai Company policy failures, new project discount rate, new project cash flows, financing the new project, future project funding. The information should be used to answer the question requirement with chosen response options. Okay, so you at the left sides, exhibit, requirement, response options, that is word processor and spreadsheet. And the left side, exhibit. I strongly suggest to my students that always start reading the question from the requirement. From the requirement. First of all, you have to read the requirement, and reading of the requirement is an art. Number one, discuss and justify. Discuss and justify. The verb used, discuss and justify the actions GKI company should take to address the 3 financial strategy policy failures. Okay, 8 marks. This is something not generic, very specific to the question. Number 2, prepare a report for the board of directors of ZKI company. Report. Okay. Estimate an appropriate discount rate to use to determine NPV of the new project, all equity finance. So we have to work out with the discount rate. That is 100% equity finance. Estimate the NPV of the new project, assuming that all equity finance. Assuming all equity finance. 9 marks. Estimate the APV, adjusted present value, of the project. 7 marks. So here examiner not directly mention the term APV, but first discount rate with all equity finance, then calculation of the NPV with all equity finance. So called, with the APV topic, we can use the term base case NPV. Then adjusted present value. Evaluate whether the project should be undertaken, means evaluation. And discuss the assumptions made in estimated above. Examiner highlighting the term assumptions. To remember that with the report, if examiner highlighting some theoretical aspect, you have to work out. Discuss whether APV would be more appropriate rather than NPV to evaluate the new project. Once again, APV versus NPV. And that is what about the 10 marks. Assumptions and the discussion, APV versus NPV, 10 marks. Professional marks, that's the free marks. That's the structure of the question, 4 marks. Okay, then finally, compare and contrast whether ZKI company should raise future funding through debt finance or through asset securitization. Debt finance or through asset securitization. 6 marks. So these are the topics that we need to consider here. If we deeply identifying the marks or evaluating the marks, that's A part or C part exclusively theory, and that is what 8, and then 6, 14 marks. And the rest of the 36 marks, that's about the report. And report include calculation and some theoretical aspect as well. If we drill down more, B1 is discount rate, all equity finance, 6 marks is the calculation. 6 marks calculation. Estimate NPV, 9 marks, once again calculation. APV, 7 marks, that's calculation. And then evaluate and make the report 10 plus 4, that's theory. That means 6, 9, 7. Out of 50 marks, 22 marks, 22 marks is calculation. 28 marks theory. That is what reality of AFM exam. You have 1.5 hours, means 90 minutes to attempt that question. And 15 minutes is reading time. Okay. 90 plus 10 minutes or 90 plus 5 minutes, 95 or 100 minutes, for example. If you have 100 minutes to attempt that particular question, number one, out of 100 minutes, you have to spend at least 20% of the time for the planning. 15 to 20% times for the planning. Good planning means good result. Good planning means you become part of under 40% of AFM result. Good plan. 20% more. Remaining 80 minutes, you have to split with the calculation and theory. Means almost, if proportionate, what is the proportion of 22 marks over 50? That's called 44% time you have to spend on calculation, and 56% time you have to spend for theory. If 80 minutes you have for execution, writing, calculation. So writing time you have to spare 80 multiply by 56%. So that's called, someone calculate me, is equal to 80 into 0.56, means 45 minutes you have to spare for writing. And for calculation, 80 multiplied by 44%, that means 35 minutes. You have 35 minutes for calculation and theory for this. This is what the complete structure for the exam. So actually, whenever you are preparing your AFM exam, whenever you are revising your AFM exam, number one, accept the reality that before the exam, if I am practicing the question, I have to practice with this structure. Once again, the 100 minutes you have, 100 minutes. You have 100 minutes, and out of 100 minutes, 20 minutes for good planning. 80 minutes for execution. Out of this 80 minutes, you have to split the 80 minutes in this. 45, 35 is equal to this 80 minutes. Whenever you practice the question, your responsibility is to work out in this manner. Number two, this is what the ideal scenario for the working. But the growth of the life, it's not in this manner, in a straight manner. No. Always the life about, always about the life aspect, growth in this manner. Sometimes you go up, then it's possible that down, then up, then down. So you practice the question in this manner, increase, then decrease. That's, if you go upside, that's good. At one question, if you fell down, no worries about. Stand up, go away. The important thing is, two things important. Keep moving, keep moving. If you move accordingly with the direction, the number two is that you will get your destination. The ultimate point is that you will be the part of the success. With the simple wording, what I am here saying is very simple. Do remember that in any part of the life, the growth always in this manner. This is not growth. It's not possible in the life that growth in this manner. It's not possible. In the medical life, if these are the vitals of the life, that means death. That life is always in this manner. The important point is that if I'm providing you direction, you have to attempt it. Sometimes it's going to better for you, sometimes you fell down. But overall, the position will be that. That is increasing trend. That's important. So important thing is that obey the instructions. So the first thing is read the requirement and then start the reading of the things. Come on. The examiner recommendation is that whenever you are attempting the question, at one time, only 2 maximum windows are open. Ideally, not more than 2. Okay, come on. I hope that screen is clear to you, huh? That's readable. Zikai company is a large listed engineering company involved in development and manufacture of environmental friendly product for business worldwide. Until a few years ago, the value of its shares has been increasingly steadily and regularly outperformed its main rivals. Okay, they are actually the engineering company, environmentally friendly products they produce worldwide, and they have developed the benchmarks of the success. However, more recently, its shares have been underperforming, and mainly financial analysts are recommending ZK shares should be sold. But nowadays, shares have been underperforming. Oh, that is the point. And financial analysts are recommending that you have to sell the shares. Zikai investors are becoming increasingly concerned. Investors are become increasingly concerned. Okay. The analysis concluded that this underperformance was due to 3 policy failures in the company's financial strategy. So underperformance was due to some financing strategy. So there are 2 important things in the financial management. Number 1, something about investment policies, something about financing policy. So here the question is the combination of investment and financing. Investment and financing. So here start the question with financing challenges. Means market and investor are not satisfied with respect to the financing aspect. Okay, what are the concern point? ZKI company does not undertake post-completion audits of investment projects. Not to undertake post-completion audits of investment means you people know very well that what should be the prime objective of finance manager. Financial management objective or the responsibility of the finance manager is that number one, identify the investment opportunity. But identification of the investment opportunity, it's not guarantee that the shareholder wealth will increase. There are 3 steps. Number one, identify the investment opportunity and evaluate. That's called NPV. Then implement that investment opportunity. Although it's not the responsibility of prime 100% responsibility of the implementation related to finance manager, because other part of the companies, that other division, that management accounting, engineering department, HR department, collectively marketing department, administrative department, technology department, collectively efforts to implement the project. Okay, but the shareholder wealth will increase. Number one, identifying opportunity, evaluate by APV, by NPV or APV. Number two, implement the project. And number three, the very important thing. Number three, the very important thing. Number three, the very important thing. Post-completion audits. Post-completion audit means if project become implemented, audit that, verify that. Are the investment implemented up to the mark, whatever we analyze with the NPV? Because NPV calculation is the paperwork. Actual implementation and the actual implementation having a parallel result with the NPV workings, that results the maximization of wealth of shareholder. That's a key point. So concern point is that ZKI not to undertake post-completion audits of investment project. Maybe they were good to identify the opportunity. Maybe they were good to implement the opportunities. That's investment. But they are not good. The market not satisfied. That what happened about the investment that you have done it. That's a key point. Number two, ZKI has used fixed discount rate 10% to assess all investment project for same years now. None of the company's senior management can remember why this rate was chosen. Means all the investment opportunity must have to evaluate based on one discounted 10%. But you people know very well that the discounted must be reflected the relevant risk of the investment. So if 10% really reflect the risk of the particular investment, that means that's okay. But this is not the justified answer that senior manager says that I don't remember why I have chosen the rate. You have to justify now why you have chosen that rate. That's important. Number three, ZKI company continually funded new investment project. Continually funded new investment project using equity finance. Continually funded new investment project using equity finance, and analysis concluded that this financing strategy sent the wrong signal to investor. Okay. So the point is that all the financing we are arranging with the new finance 100% equity. Maybe this is a wrong signal to the investors. So these are three concern points. Lack of post-completion audits, no fixes, using the discounted without any justification, using the equity financing only, no proper justification. Why not using the mixed finance? Why not using the debt finance? So this is the first introduction material available. And if you are sitting in the examination hall and you have already read the requirement, that is already highlighted the A point. Discuss, justify the action ZKI company should take to address three financing strategy policy failures. So this is the first part related. But number two, some investment evaluation. Some investment. ZKI company is considering a new project to manufacture environmentally friendly motor scooters. New project, motor scooters, which are fully carbon neutral. This is a diversification into new business. That is the diversification, okay? In which it has no previous experience. Okay, ZKI CFO is of the opinion that ZKI company should determine an appropriate discounted. For the project based on initial assumptions that the project will be all equity finance. Project will be all equity finance. Just a moment. Okay. Initial assumptions, the company is 100% equity finance. Okay. Liu company would be a competitor of ZKI company, and it manufactures environmental friendly motor scooters as well as equipment for wind farms. Who is this Liu company? Can we consider Liu company as the proxy company? Yes. Liu company as the proxy company, but this proxy company manufacture motors and equipment as well. They are involved with the two particular companies or two particular industries. 60% is manufacture motor scooters, okay, and 40% farm equipment. Two things. Given below is the most recent financial information related to Liu company. Okay, Liu company details. But we are not interested for the wind farm equipments. We have a concern with the motor scooters. Okay. Sanvinu company, another company, Sanvinu company is involved in the manufacture of wind farms. Okay. It has been estimated its K 15.4%, cost of equity 15.4%, and it is financed 20% by debts and 80% by equity market value. Equity market value. The risk, okay, Sanview, another proxy company. Can we say this is proxy for ZKI company? No. This is not proxy for ZKI company. Actually, our proxy is Liu company. And Liu company involved in are diversified motor scooter and farm equipment as well. So if we identify Liu company beta asset, so Liu company beta asset is weighted average with 60-40. But we have to identify the figure of Liu company beta asset belongs to motor scooter. That's why for the sake of our equation, we have to identify beta asset of the wind farm equipment as well. That is the key point. That's why we required the WAC matter. Do remember that majority of the exam paper of AFM includes the complication of WAC like this, either in the form of investment appraisal, APV, acquisition merger with different aspect. And you can get 4 to 5 marks easily. Estimated risk-free rate 4.8%. Estimated risk-free rate 4.8%. Market risk premium 8%. Corporate tax rate 20%. That is what about the new project. New project cash flows. That's a simple one. New project cash flows. Zeekai company expect that new project manufacturing environmentally friendly motor scooters to the last 4 years. Two things were required: discounted and cash flows. Here the cash flows. Project will require immediate expenditure 70 million of the plant and machinery. Okay, that is immediately required. That's year 0. After project ends 4 years time, it is anticipated that the project will be sold 42 million. The complete project will be sold. That is project value. That's the project realizable value. It's not the plant realizable value, including any inflationary increase. The following estimates of the revenue and costs relating directly to the project have been, okay. First year sales revenue expected 10 million. And then increase 40 million in year 2. And final 2 years project sales revenue 20% of each year. Then costs are estimated 120% of sales revenue first year, 80% sales revenue second year, before reducing to 40% sales revenue for each of the 2 final years. Simple. Cost first year exceed the revenue. Next year 80%, next 2 years 40-40. Okay. Substantial initial working capital. 10 million required at the start of year 1 of the project. Start of year 1 means? Anyone reply? Start of year 1 means? Year 0. Very good. And subsequently working capital 15% of sales revenue for that year required at the start of year 2 to 4. Year 2 to 4. That's important, huh? Year 2 to 4. Yes. Sales revenue. Year 2 sales revenue. That's a working capital required. Sales revenue year 2 working capital required 1 year. Year 1. Year 3 sales revenue required working capital year 2, then 3. And 4-year project, the 4th year, then all the cash flows will be written back. Any remaining cash flows will be released at the end of the project. Okay. Zeekai company pays corporation tax 20% each year. Tax 20%. Okay. Tax payable with the year time delay. Tax is time delay. And any tax losses from the project are set against the project from any other projects. Candidates, there are 2 important things about the tax losses. Either tax losses can be carried forward, or tax losses can be adjusted with the other part of the company's project. So here examiner particular mention whatever the tax losses here, we can adjust tax loss with other project of the companies. That means here we consider the tax losses. Here we consider the tax losses creates tax savings. If examiner particular mention carry forward, then use the carry forward issues. If not, if examiner mentioned that no tax losses can be compensated from any other project, that means that tax loss will result the tax savings. The tax allowable depreciation is available on expenditure on the plant machinery for the annual rate. Tax allowable depreciation. 15% reducing balance. It is anticipated that plant machinery have a realizable value 20 million. At the end of project, this realizable value included with the project estimated sales price, the complete sales price of 42 million. The question is not very much technical with respect to the calculation, but it's a combination of calculation and theory. Then finance the new project. Finance the new project. Due to the positive environmental nature of the new project, Zekai company, I will repeat the tax losses matter once I will attempt with the spreadsheet. The question work with the spreadsheet. Due to positive environmental nature of the new project, Zekai company can obtain the entire funding of the project throughout the loan subsidized interest rate. Entire funding project for the loan subsidized interest rate 180 basis points lower than the risk-free rate 4.8%. Zekai company's normal borrowing rate, normal 6%. So number one, 6% is KD, 4% is it's better to highlight that particular point. Number one, what is the KD here? KD is 6%. Very good. What is the subsidized rate? Subsidized rate is 4.8 minus 1.8. That is 3. So what is the subsidy? Subsidy 6 minus 3 is equal to 3%. That is what you have to highlight, that particular point. That is the point. Zekai company has decided that the project should be entirely funded from the subsidized loan. Issue costs which need to be paid are anticipated to be 3% of gross finance. Issue cost 3% of the gross finance. Issue cost not allowable tax deductible expense. Given that the new project is to be funded by subsidized loan, Zekai company's CFO is of the opinion that adjusted present value would be more appropriate than conventional NPV. This is again the important point with respect to the requirement. Why APV is better than NPV? Based on the risk adjusted discounted to evaluate project. However, he cannot explain why should be the case. So question is that he cannot explain, the CFO cannot explain why this is the case, but you have to explain. That is the requirement. Last point. ZKI Board of Director is considering whether to raise funds for forthcoming project, either new debts or through asset securitization. Means the question about debt versus asset securitization. In addition to manufacturing business, ZKI company receives a rental income. ZKI company receives rental income, some of its factory premises and its plant machinery, which it hires to other companies. The board of directors is of the opinion that it should use this rental income, securitize this rental income. Securitization is actually a concept for the debt, arrangement of the financing. We will discuss with that matter with the part C. So this is what about the question. If you're sitting in the examination hall, first start with just a quick go through of the basic exhibits, then read the requirement, then read the questions details, then once again read the requirement. And at that moment when you are finalizing, read the requirement, your mind also works the sequence what you wanted to attempt. For example, most of the students attempted first part B, almost 95% of the students, the report writing. No worries about that. You have to attempt, you have to start with this. And then at last with the remaining part A and C. No worries, no issues. It's your choice. So read once again, discuss, justify actions ZKI should take to address the three financing strategy policy. Whatever the initial matters, post completion audit matter, why use 10% discount rate, why use 100% equity finance. So we have to make a discussion with justification. Number two, the report writing, we have to work with the appendix P1, first appendix 1, discount rate, assuming 100% all equity finance. Report B2, that's NPV with 100% equity finance, that's base case NPV. 3, the APV. Okay, that is a B1 appendix 1, B2 appendix 2, B3 appendix 3. And then 4, including 4, we have to make the report accordingly, mentioning the report structure, including the assumptions and APV versus NPV. Professional marks, we will work out with the professional marks as well. Then compare and contrast, contrast the debt financing versus asset securitization. That is the point. So number one, the very important thing, we have read the complete question accordingly. Even you people are watching the video, if you have any problem, you can ask me on the WhatsApp. The very first thing till now, we have read the question. This is an art, how to read the question. And this is the part of the planning phase. This is the part of the planning phase. That's a key point. Now, another point. We are going to start our calculation aspect. With the report writing. With the spreadsheet, we will work out, we will mention the part B here. Okay, come on, start. What are the relevant windows, which is important here? Number one, the due discount rate. This one is the due discount rate details here. and use this. Yes, come on. That is part B. I strongly suggest all of you also work with me about this particular question. And that would be good if you attempt the question simultaneously. Yes, start. Part B. Come on. Appendix 1. Part V1. Part B1. What we required? We required asset beta. We required asset beta related to manufacturing of motor scooter. Okay. So what we should do here? Come on. We required the very first thing for the discount rate, but we know very well that with respect to the discount rate, sorry, yes, for the purpose of the discount rate, we have to work out the beta asset first. First, the beta asset. Discount rate, 100% equity finance. The company assuming 100% equity finance. Assuming company has 100% equity finance. If the company is 100% equity finance, what we required? The risk-free, risk premium, KE ungeared. Yes, come on. Mention me. What is the risk-free rate? 4.8. Risk premium, 8 minus 4.8 is equal to 8 minus 4.8. For KE ungeared, we required the very important thing, the beta asset. Motor scooter, MS motor scooter. And then we will identify the discount rate, 100% equity finance. Can you please reply me? All of you are with me. Is my screen visualization all clear, all set? Okay, come on. Next part. Discount rate, 100% equity finance, all these things. Come on. That's good. That's why we required the asset beta of the manufacturing of the motor scooter. If we required this, we have to use we need to work with proxy company. With proxy company information. Yes, we have to work out with the proxy company information. Come on, work out with the proxy company information. Proxy company information. And what? And here the proxy company name is Leo company. Come on. And we will work out beta asset weighted average is equal to 60% of beta asset related to manufacturing sector. Oh, sorry, motor scooter plus 40% multiplied by beta asset of others. If I'm not wrong, this will wind farms. Manufacturing of equipment of the wind farms, farm equipments. That is the difference. Come on. That is the difference of 60% and 40%. 60% manufacturing motor scooter, 40% farm FE, farm equipment. So number one, what we need to do, we have to identify this 60% of beta asset of motor scooter. We have only interest for this. So what to do is first, First of all, we have to identify beta asset weighted average. Risk premium is 8%. Risk premium is 8%. Okay, risk premium is 8%. Sorry, that was my mistake. Risk premium was 8%. Okay, number one, the point is that beta asset weighted average. Come on, beta asset weighted average. We know very well with the CAPM, the formula is available. What is the formula? Beta asset is equal to, no need to mention the formula. Beta equity multiplied by E divided by E plus T 1 minus T. One minus T. This is what the formula. But do remember that whenever you need to identify the working, you have to fill with these brackets. Beta asset is equal to beta equity multiplied by E, the bracket one, another bracket, and then 1 minus T adjusted, direct tax adjusted. Now come on, beta asset weighted average is equal to, what is the values here? Yes, the market value equity 172, here 172, 48.26, and equity beta 1.20. I'm putting these values 172, 48.26, and 1.20. Yes, work out accordingly. Can you please apply me? The values accordingly. What is the particular value? Okay, come on. Yes, is equal to 1.2 multiplied by 172 divided by 172 plus 48.26 multiplied by, what is the tax rate? 0.2, that is 0.8. 0.98. 0.98. That is a beta asset. No need to mention here. But just for your side, for clarification, I have mentioned the complete working. For exam, you don't need. So first of all, we have identified what we have identified. Yes, come on. We have identified lieu beta asset weighted average. Okay, so weighted average. Now we have to enter with the sen venue. Beta asset for the purpose of only farms equipment. Can you please reply me, all of you? Are you with me? Sen venue, beta asset, farm equipments. Yes, farm equipments. So what the data here? The data available here. So for Sen venue company, that is about, which deals with wind farms, equipment for the wind farms, that includes the equity, cost of equity and finance. But what we required beta equity. We required beta equity. How we will find the beta equity? How we will find the beta equity? Here the data given, the cost of equity 15.4. The cost of equity 15.4. Data available risk free 4.8. RM risk premium is 8. So here we are not able to calculate the beta equity with the reverse working of beta asset. Rather than we can work out what the reverse working of the CAPM formula. What does that mean? KE is equal to RF plus risk premium multiplied by beta equity. This is not the norm the examiner examined. First time examiner examined the reverse working of beta equity with the CAPM. Although it's very simple, but if you are sitting with the examination hall, that will become the tricky part for you. So here, normally we used to calculate the KE, but here we required the beta equity. Here we required the beta equity. So how can we find it? The beta equity. We will find it, the beta equity, like this, is equal to 15 point, is equal to 15.4 minus, what is 15.4? KE minus what? Minus 4.8 and then divide the risk premium, that is it, 1.325. Yes, Control C. That is the point. Beta equity. Are you getting the point? How is calculated? But here is the beta equity. We have to identify beta asset of this. So it's very simple. Now we have identified the beta equity. Its simple formula is equal to 1.325 multiplied by 0.8. 0.8 is the E divided by 0.8 plus 0.2 multiplied by 0.8 after tax. And that's a simple working. That is 1.10. So we have identified the beta asset for all these things. No, you don't know. Do remember that we don't need to show these working with the examination. No. These working is just for your purpose. It's just for the class purpose, for clarification. Examiner will check with the bar here, 1.325 like this. Here the bar, you don't need. Number one, that's all over. Next thing, now we can find out based on this. Now, beta asset of motor scooter. Come on. With this working. So it's very simple. We have already identified 0.98 is equal to 0.6 multiplied by beta asset motor scooter plus 0.4 40% multiplied by 1.1. So 0.98 is equal to 0.6 multiplied by beta asset motor scooter plus 0.44. And now it's very simple. Beta asset motor scooter 0.98 minus 0.44 divided by 0.6. That's all. That is 0.9. That means beta asset we have done with this. Beta asset of motor scooter is this. And finally, the discount we have identified this. $0.9. Now calculate is equal to 4.8 plus 8 into 0.9. That is 12%. That is the discount rate. Candidates, can you please reply me? Are you with me? We have to complete this question by today, huh? With all aspect. Okay, the very first thing that's called, this is the first thing. This is the first requirement that we have done. Now the next requirement. Now the next requirement. Estimate the NPV of the project, that is all equity finance, and then APV. Then NPV for the project, that is all equity finance, then APV. These are the cash flows. Okay, come on. Appendix 1, we have done it. Now it's about Appendix 2. Appendix 2, Part B2. And what is this about? NPV with 100% equity finance. We can mention base case NPV. Now come on. What is the life of the project? What is the life of the project? Sorry. What is the life of the project? The life of the project is 4 years. Hello, can you please reply me? Are you with me? Life of the project. Do reply me. 4 years life. Yes, be participative. That's called. Okay, one by one. 4 years life, 1 year extent because of tax is 1 year delay. Number one, sales revenue. Sales revenue. What is the sales revenue? How much is the sales revenue? Come on. Sales revenue. Mention. First year, 10 million. Second year, 40 is equal to 1.2. These are the sales revenue. Cost, excluding depreciation. Costs are estimated 120% is equal to 120% of this. And next 2 years, sorry, then 80%, then 40%, then tax depreciation, then tax depreciation, tax depreciation. What is about the tax depreciation here? 15% of the reducing balance basis. 15% reducing balance is equal to the investment is 70 million. 70 is equal to minus 70 into 0.15, 10.5. Control C. No. Then you can use directly minus 10.5 multiply by 0.85. Control C, Control V. One moment. Okay, minus 7.59. Now you can work out directly. Is equal to 70 minus sum. What is the sum? This is the sum. And minus residual value. What is the residual value of the machine? What is the residual value of the machine? 20. That is 70. One moment, please. Okay. You can work out directly. This is what I have done it. Sir, what you have done is equal to 70 plus sum. Actually, I'm not plus here. I'm minus here. Plus, minus, minus. Then minus residual value. And residual value is 20. That is 22.99. It's your wish. Either you have to mention with the remaining values, you can work here. No matters it is. Tax depreciation. Okay, then taxable income. What is the taxable income here? This is the taxable income. Oh. Just a moment. Just a moment. Is equal to 70 minus sum of 10.5 plus. Okay, if you have any confusion, I will work out in a separate manner. Machine cost 70. Capital allowance claimed is equal to sum is equal to minus sum this one. Residual value minus 20 is equal to sum. These are the values. 77. Sorry. I'm sorry. Yes, that is the point. Can you please apply me? Is that clear, all of you? That is 22.99, that remaining balance. But that particular 22.99 is actually in the minus figure. 22.99. Okay. That is the taxable income. Now tax payments. Tax payments or savings. Tax payments or savings. Now the important point is that here, what I was telling you, that is if we are working for this, these two figures are payments. Oh, sorry, negative. So that means this is taxable loss. Taxable losses. In case of taxable loss, here examiner mentioned that left side, last para, any taxable loss project are set against the taxable profit other project. So that means this is our saving is equal to this one, but 1 year delay is equal to year 2 taxable loss multiplied by tax rate 0.2, but we have to mention the minus figure. Minus means tax loss creates tax saving. Tax income creates tax payments. Control C and Control V. That is the point. I hope that till now all set, all clear. Tax payments, tax savings. If you have any problem, you can ask me. Okay, I'm going to repeat the tax matters. It's very simple. Here, examiner mentioned that this paragraph, last left side, ZKI pays corporation tax 20%, tax payable 1 year delay, and any losses from the project are set against the taxable profit of other project. Here, examiner mentioned that it's not carry forward. It's about the project can set or adjust the tax loss from any project. Assuming that, for example, we have a business of car and we have a business of, we are going to start a business of telecom. So we are projecting that at year 1 of the telecom, if we start having taxable loss, but our calculation says that whatever the loss we will face with the telecom, that loss can be adjusted our profitable business of car industry, of the car manufacturing. So same case here. If Zykai start motor scooter business at year 1, that will create the loss. But that loss can be compensated from the other division of Zykai company's taxable profit, and we will adjust the taxable loss from that taxable profit, and that's deemed to be inflow. Any saving in the investment appraisal deemed to be inflow. Can you please reply me? Is that clear? Okay, that's called tax savings. Now, another point that is about the working capital. Come on, related to working capital. Related to working capital. Come on. Working capital. So it's for working capital, you have to work out for the working one. Zero, 1, 2, 3, 4. Come on. That is total and incremental. Total. Total working capital. Come on. How much the total working capital requirement? Here, second last paragraph. Initial working capital 10 million. 10. Then start of the year, 15% of the sales revenue. 15% of the sales revenue into 0.15. Sorry, 15% of sales revenue. So read it carefully. Initial working capital here, left side, 10 million required start of the year 1. Subsequently, working capital 15% sales revenue, that year will require start of year 2 to 4. So number 1. Now we required 10 million. And then remaining working capital required based on year 2, 3, 4. So here is equal to sales revenue 40 multiplied by 0.15. 6. Control C, Control V. That is year 2 sales, year 3 sales. Now incremental is equal to 0 minus 10 is equal to 10 minus 6. That's inflow is equal to 6 minus 1.2 is equal to 7.2 minus 8.64 and is equal to 8.64 minus nil. That's 6.64. Can you please reply me? Is that clear to you about the working capital? Okay. Any problem you can ask me. That is J40 is equal to J40. Control C and Control V. That is the working capital. $6 million. From where we get 6 million? That's simple. This is what about the sales revenue? 40 multiplied by 15%. That is 6 million. Is equal to sales revenue multiplied by 0.15. That is 6. Then year 2, year 3. I hope it's clear. This is clear to you. That is working capital. Now come on, next. Then investment. Then investment. How much the investment? Minus 70. How much the realizable value including plant and machinery? 42. Now your net cash flow. Okay, one thing we have to incorporate more, that the reversal of this tax depreciation. Yes, tax depreciation, we have to reverse it, is equal to reverse the depreciation. Yes, one thing. Net cash flow, these are the net cash flows. Your discount rate, KE ungeared. What was the discount rate? 12%. Okay, so NPV is equal to NPV 0.12 bracket close plus this. That is 1.06. Can you please check it once again, including all the spec matters? 1 or 0.9 or 6 accordingly. This is what about the base case NPV. That is what Appendix 2. Now Appendix 3. Appendix 3. Adjusted present value. And for adjusted present value, that is base case NPV. That you have already done, this one. And now incorporating the financing side effects. Very interesting. Financing side effects. And we have to work out for this financing side effects. Candidates, it's important to take a quick break about this. 5 minutes break, a short break for the 5 minutes, then we will work out with the financing side effects. Take a break for the 5 minutes, then financing side effects, and then complete discussion of the theoretical area as well. So take a break. Thank you very much. Okay, so welcome back once again. So next part of the session that's related to the working of the financing side effects. Come on. Working for the financing side effects. Financing side effects. Can you please apply me about the screen visualization? Screen visualization. Okay, now financing side effects. Financing side effects. Financing side effects. Okay, financing side effects. So what are the things that includes with respect to financing side effects? Number one, issue cost. Okay, then after the issue cost, what's next? The tax shield. What's next? I must use the word value tax shield and value subsidize subsidized loan. One by one. With respect to the examination matter, something you have to work out that the very important thing, you have to take some assumptions. Assumptions about what? Number one, issue cost. Issue cost is relevant, don't need to mention that's it's relevant or not relevant. But issue cost, you can mention that will be arranged from internal source of finance. That you need to mention. Number one. Number two, same case about working capital. Examiner not mention here from where we will arrange the working capital. But your model answer, make a calculation in a manner that working capital will arrange with external source of finance. That's the 2 points. That's the 2 different points you have to consider here. That's the point. Sir, if we work out with the exam solution working capital from internal source, no worries. No worries at all. No worries at all. That's completely okay. No issues. Okay. So number one, issue cost. So here mention that issue cost the issue cost here 3% of the gross finance. 3% of the gross finance. And not allowable for tax purpose. Not allowable for tax purpose. Whatever the finance we required, number one, the finance we required net of issue cost 80. This is a very important point. Huh? Finance we need net of issue cost for investment for investment. That's 80 million. That's important. So that means this 80 is after issue cost. This 80 is after issue cost, means the total finance is gross after deducting 3. That's become 80. So in this case, the issue cost will be is equal to 80 divided by 97 into 3. That is 2.47. I hope that it's very clear to you. This 80 is the investment that is net. It's not 100%. It's after issue cost. And this is 2.47 or 2.45. 2.47. And this is what about the minus? Now, the another important point, the issue cost, tax shield. The another important point is tax shield. Number one, you have to highlight some important point before attempting the question in the examination hall. Is this about simple interest or compound? This is with simple interest. This is with simple interest. Okay. So what is the things required here? Number one, debts multiply by interest multiply by tax rate and multiply by delayed annuity. Why delayed annuity? Because tax benefits 1 year delay. So very important thing you need to identify what discount rate we will use. Another assumption for financing side effects, the discount rate will be KD. And here KD already mentioned with 6%. So delayed annuity with 6%, year 1 to year 5 minus year 1. Number one, year 1 to year 5. Here the discount table here. %, 4.212. 4.212 minus first year discount rate 0.943. 3.269. 3.269. We will use 3.269. This is the point. Now come on. We will work out here. Is equal to 80 multiplied by the interest we will pay. How much the interest? The subsidized rate 3%. 3% multiply by 0.2, 20%, multiply by 3.269. That is 1.569. 1.569. That is 1.57. That is 1.57. That is 1.57. Or 1.6, whatever. I hope that it's clear to you. It's very basic. Next point, after tax shield. Subsidized loan value. Subsidized loan value. Now come on. Subsidized loan value, here we need to work out two-step model. Why two-step model? Two-step model because subsidized loan value without tax at first step. Second step, tax adjustment. So number one, year 1 to year 4. Subsidized loan, that is debts, multiplied by subsidized rate. Subsidized rate multiplied by annuity factor. Simple annuity. Number one. But number two, year 2 to year 5. The tax adjustment. Tax adjustment. Subsidized loan multiply by subsidized rate multiply by tax rate multiply by delayed annuity. Now start working. Subsidized loan, that is 80. Subsidized rate 0.03, that is 3%. Multiply by simple annuity, year 1 to year 4. 6%. Simple annuity 3.465. 3.465. Multiply by, sorry. That is 8.316. I hope that all you people are with me. Number two, 80 multiplied by 3% multiplied by delayed annuity as mentioned above. What was the delayed annuity? 3.269 multiplied by 0.2, 20%. That is 1.56. But this complete value that should be minus. That is 6.75. Can you please apply me, all of you with P? 6.75. Now calculate all these. That is 4.78. The APV of the question, that is 4.78. That is what about the question. APV 4.78. Very comprehensive question to recall the things of the APV. I hope that a lot of things you have reviewed with that particular question. Financing side effects, base case NPV, and basic structure, all these things. Okay, now come on the next very important point. The next very important point, that is about, we have done 6 marks, 9 marks, 7 marks, that's 22 marks. Now the point is about the report. The point is about the report. The very important thing about report. Sir, what are the things that we have to consider with the report writing? Now, a very important things you need to consider here. Listen carefully. One moment, please. One moment. One moment, please. Yes, come on. Okay, it's time to work out for the report. Some important things to work out for the report. Some important things about the report here. The very important thing. Plan your answer. According with respect to two things. Number one, time management. Number two, marks management. Time management, we have already discussed that point multiple times. Time management means you have 1.8 minutes for each mark. And here, how much the time you have? The total marks 10 plus 4, 14 marks, including professional marks. .8 multiplied by these values. So how much it? Is equal to 1.8 into 14. That means you have 25 minutes. 5 minutes for planning. Plan. Five minutes. And execution 20 minutes. That's split in two components. The first thing. So you have to very much stick with the calculation and the theoretical aspect with this point of view, with this aspect. Your time, you must not in a position to extend your time for this. Number two, the very important thing, the marks management. Marks management means you have to stick about that, what to write. What to write. So for this, carefully read the requirement. Two things. What to write. Two things. Number one, carefully read the requirement. Plus, free marks for the professional marks. Free professional marks. So according to the requirement, there are four things that's mentioned. Means if I'm going to work out for this, these are the marks. Number one, report structure and presentation, 4 marks. That's a very key thing. Report structure and presentation, 4 marks. Examiner particular use the word here, evaluate. Word use here, evaluate. So what evaluate here, 3 marks. What is the meaning of evaluation? I will discuss here. Assumption having 4 marks. Exam, because here examiner mention assumptions. 4 things. Number one, evaluate whether the project should be undertaken. Number one. Number two, whatever the assumptions you have made, you have to mention here. 2. Number 3, discuss APB, why appropriate? 3 marks, 3 things. 4, report structure. So you have to develop the mind that you have to write it accordingly. Can you please reply me? Is that clear what I'm saying here? Before this planning, you must not be in hurry to attempt the question. That's a key point in the examination. And number 2, whenever you are revising or practicing the thing, you have to implement with this manner for all of the rest of the questions. Can you please reply me? Are you people with me? And are you getting the point of what I'm saying? That's a key point. That's a key point. Okay. Now, one very important thing. Sir, you said that these are free marks. But what are these free marks? Can you please tell me? I must say, if you start the things, what we need to be careful whenever we are structuring our report or presentation our report. Yes, I will tell you. What is the format? One by one. Number 1, you have to mention report. You have to mention. You will mention in this part like report. You will mention report to whom. For example, you will mention report to the board of directors. Don't use the short form, board of directors. Here, board of directors of Zikai company. You will mention this. You will mention the report subject. Report about the evaluation of the new project motor scooter, MS, whatever. Then, and these are the part of the format, introduction paragraph. Introduction paragraph. You have to mention introduction paragraph. You will mention about report. What is about report? This report is about evaluation of the project, and that should be extended from the subject above mentioned, which is a diversified project. And don't mix the introduction with the evaluation. No need to start evaluation here. That should be very much brief. That should be very much brief. Very brief. Report is about the evaluation of the motor scooter project, which is a diversified with a new style of the project. The company have no experience and the evaluation is based on adjusted present value, or the evaluation based on the discount rate, KE ungeared, and NPV and financing side effects, that's called the adjusted present value. Very brief. Then this report include conclusion. This report include conclusion. Conclusion. The report include last report compiled by. Only just mention compiled by. If examiner mentioned that you are junior accountant, mentioned by junior accountant. And you will mention the date. It's your wish either to mention, write the date or not. And with the report, whatever the material, definitely, whatever the material, all the context of the report must be headed. And reference with appendix. Details of and the details must be refer with appendix. Do remember that for all the working of the appendix, sorry, for all the working where you mention appendix 1, 2, 3, it's also the part of formatting. It's also the part of formatting. Working headed with appendix. You just make a practice of these formatting with 7, 8 questions. After that, 4 marks in your pocket. Free marks. One more thing I want to add here, the conclusion. The conclusion paragraph, it must be very much diplomatic. Must be diplomatic. Don't use the word diplomatic. Diplomatic means if your answer with that side, the negative and base case NPV, or sorry, negative APV or positive APV, accept the project or reject the project. But don't conclude your wordings just specific, accept or reject. No. Okay, the project is positive, must be accepted, but we need to consider the risk and uncertainty aspect. We need to consider the real options evaluations for more to determine more accuracy of the reports, because the reports having assumptions as mentioned above, like these are type of wordings, assumptions reference, risk and uncertainty references, because never ever any of the person who are presenting the report about the future strategy taking all responsibility on their own shoulders, because it's all about the future. And this type of wordings, diplomatic wordings, also reflect that you have made the report in a professional manner. So that is what the structure of this particular report matter. The first thing. Number two, very important point. This is the report point. That's the first thing I mentioned here, the report structure. 3 marks. Then I mentioned that carefully read the requirement. So what is inside the report? That is inside the report. Inside the report. So for this, number one, first carefully read the requirement first, and requirement and allocated marks. How much to write, what to write, and how much to write. What to write means carefully read the requirement. Read the requirement and allocated marks. How much to write? For example, here evaluation marking scheme says 3 marks. Sometimes students ask me that, sir, how much line, how much points we need to work out. No. Number one, for evaluation 3 marks, the very first thing, the answer must be precise and complete. The important rule is that your answer must be complete and precise. What is the meaning of evaluation here? What is the meaning of evaluation? What is the meaning of evaluation here? What I say that, what I must say with respect to evaluation. Evaluation means we have to refer all the appendix matter. Means in this case, the NPV is, sorry, base case NPV is negative. Refer to Appendix 2, for example. But the financing side effects incorporates, we incorporate the financing side effects and APV become positive. On that basis, the project should be accepted. This is evaluation. So based on appendix, like you mentioned that complete. Although, for example, the wording is although don't use the word base case NPV because here examiner mentioned NPV, all equity finance is negative. How much negative here? How much negative? 1.06. And you have to mention here Appendix 2. But after incorporating the financing side effects, the APV become positive, and that is 4.78. And you mention Appendix 3. You will on that basis, On that basis, the project must be accepted. That is called evaluation. But here 3 marks here. This is the starting point. Start with mathematics. Then incorporate. Then incorporate more things with that point. For example, the project is funded by 100% subsidized loan. But not necessary without it. Further, if you deeply in with that particular question, the majority of the cash flows of the project, it's 4th year. It's 4th year. Majority net cash flows, the inflows, majority of the cash flows belongs to this one, 80.96. So you have to highlight that point. That is called flexibility. Major cash flows belongs to 4th year. And we need to consider very critically about this year cash flow with these year cash flows, because the success of the project is entirely based on this cash flow. Or we can say that the project APV is not marginally positive. It's not marginally positive. It's very less marginal positive, and majority of the cash flow belongs to year 4. Now do let me know, for 3 marks, we have to write all these things. Number 1, for 3 marks, these points called completeness. If we ignore the 4th year cash flows matter, my answer will not be complete. Are you with me? Do reply me. Do reply me. Even you people are watching my video. If you have any problem, you can reply me accordingly. One moment. Wow. Okay. Then the point is about assumption. 4 marks about the assumption. What are the points about the assumption? What about the assumptions? With respect to your regular studies, assumptions are the point of NPV and APV, which are very standard. For example, beta acid reflects the systematic risk. This is the assumption. But here, if we just mention beta acid reflect the systematic risk, this is not the complete answer. This is not the complete answer. How we will mention that? The point is that beta acid reflect the systematic risk. This is the point. But how we will draft the answer? We will mention then in Appendix 1. In Appendix 1, we calculate the beta acid with reference to Liu company and the another one. What the name of the another one company? Sanvino company. S company. By de-gearing each company's equity beta. Okay. We assume that the beta acid of the both companies reflect the complete business risk. How many assume? We have already assumed that particular point. So the point is that here not just mentioning the beta assumption, but also connect with the case. For example, another one in Appendix 1, we assume that all inputs means all variables, all input variables like sales revenue, like tax rate are accurate and not to change over the life of the project. Like tax rate 20% and other variables. Yes, Appendix 2 and so on. You have to write the answer in this manner. Moreover, you can 4 marks. You have mentioned that at least I have to mention 3 to 4 points. You can mention the financing side effects matter. And Appendix 3, the financing, FSE financing side effects. We use the KD as a discount rate. We consider the interest rate that will not change in the future. If the answer may become changed if we use the discount rate, not the KD, but the risk-free. If we use the risk-free rate, the discount factor become reduced and the value of the APV will become increase. That is the point. And finally the point, appropriateness of the APV 4 marks. That is, you have to write the answer NPV versus APV. Means why APV is important. Sorry, why APV is more accurate or more appropriate, not accurate, more appropriate. That's the part of your regular studies. You can mention 2 to 3 points here. For example, with the APV, we use the principle divide and conquer, means divide the cash flows and attach the relevant discount rate. Dividing the cash flows, for example, 100 operating cash flows, that discount with the systematic risk, because associated risk of the operating cash flows, it's not financial risk. The financing side effects, cash flows, associated risk, financial matters. As compared to NPV, where we use all the cash flows with a single discount rate. That's a point. That's a 1 point. APV use the principle of Maudlany-Miller. APV use the principle of Maudlany-Miller, where the companies having injection more debts become more valuable, but ignoring the financing distress. But this is not the principle with respect to the back matter. So I strongly suggest 2 concrete points for this. And that is how you will write the answer of the report structure accordingly. So that is all about the B part of the session. That is all about the B part of the matter, the B part. That is the B part. But now we have to work out with the A part and the C part accordingly. But this phase of the video, this phase of the session conclude here. We will discuss the A and C part with the next session.